retail sales report, like the retail sales came out. I was watching a guy last night and he goes, how do retail sales go up 1%, but industrial production goes down 0.9%? Wouldn't that be if the sales were up, you'd be producing more to meet those sales, you know?
It's called
And
inflation.
you would. But then he goes, he looks at the chart and says, well, that's because for the last 6 months, every time they have these high, you know, charts, they come back and revise them down here and no one ever talks about it. So they get the bump in the stock market, like, oh, 1%, yeah, retail sales. And then like next month, it's going to be, oh, we revised it down to 0.1% instead of the whole 4%, and and no one cares. And that's what's happening. We're too stupid. On this channel, we try to go through that every Friday. I try to go through that and say, here's
Yeah.
what's happening. Look what's happening. Oh, the markets are great. Well, they are. Okay. But look at delinquencies, look at this, look at that. And it doesn't add up to me. Just like you guys
No.
going to the grocery store. Jan's the same way. How can it only be 2.9%? Well, that's because it's month over month. It's still rising 2.9%.
Right.
Okay. On top of the 25% we've already had. So if it rises 2.9 on 25, now you're at 27.9% inflation. Okay. Time year over year, from 2020.
Wow. Welcome to the Best of U.S. Investors, Two Regular Guys show. I'm Trent, and this is Mark. And today we're going to get into this week's agenda amongst the Federal Reserve and a bunch of other events that are going to go on. We're also going to talk bonds, and we're going to hit some charts. But we're going to get a little into some commentary of what we've been talking about off camera for the last hour and what's happening in the world and how this could be helpful to, one, protect your wealth, but two, create wealth. So let's get going.
Well, it's 11:30 a.m. on Monday, the 19th of August. So anything that we saw on charts or anything, that's the time we're looking at it. So when this video comes out, things may be different, than what we saw there. But at the time, we're looking at, markets that are up maybe 0.5% now across the board. We're looking at they're just kind of being really uh, flat and indecisive today. And there's a few reasons for that. And all you have to do is look at, this week's highlights. And, today we have the U.S. leading economic indicators will come out, and we've got a couple speakers from the Fed. And then Tuesday we have the Vice Chair, Michael Barr, and Atlanta Fed President Bostic are going to talk on Tuesday. Wednesday we have the Federal Open Market Committee, July 30th to 31st. Meeting minutes are coming out. So, everyone, there'll be a countdown clocks and crap for that. When are they going to lower interest rates and blah, blah, blah. Thursday, initial jobless claims, which I don't know if I can believe any of these reports anymore. I don't know, but they're comedic to me anymore. So that's like reading the funny pages for me personally, that I don't have much confidence in some of these reports. Existing home sales will come out. That'll be very interesting to see, if anyone's selling their homes now and what the prices might be. S&P U.S. service and manufacturing PMI, which will be interesting. That comes out Thursday for August. And then they have, if they didn't need enough vacations, the Fed and everybody, all the Steve Leismans are all going to Jackson Hole on Thursday to, discuss our future and the economy. So all the private jets will be flying into Jackson Hole, making their carbon footprint known. And then on Friday, Chair Powell delivers remarks at Jackson Hole. And I think it was a couple of years ago he made those remarks about things are going to get harder or tougher or whatever, and that tanked the market that time. I think it's 2 years ago he did that. So we'll see what happens. So there's your Friday. So now the market just sitting back and looking, going, okay, is he going to raise rates or lower rates, or what the heck's going to happen? Just same thing that's been happening for the last 18 months. And, whether they raise it or lower it, they lowered a quarter point. It's not going to have any effect, in my opinion, on anything but the psyche. Okay, we may get a bump in the market, but it's going to take 12 to 18 months to filter through your system. And if it makes the, your mortgage rate go down, with 0.2%, is that really going to say, oh, wow, mortgage rates went down, I'm going to refinance my house, at 5.9 or 6%? Probably not. Okay. Probably not. I feel like I'm living in the world of David Copperfield. Look at the illusion here and look how great this is. And then I don't know. What do you think?
I agree with you. I think I'm starting to see how, I live in a pretty affluent area here on the Panhandle of
Because
Florida.
you're an affluent guy.
Whatever. I'm at the bottom end of the income scale down here.
He's the higher end of the two regular guys. I can
Yeah,
tell
there
you
you
that.
go. Well, whatever. But I'm starting to see rich people scream about how false these government reports are, in particular inflation rates. This weekend was a bonanza of all the people I know, wealthy people I know, who are screaming about where are they coming up with 2.9% inflation rates? And they're actually spilling the beans on how much they're spending, now compared to a year or 2 years ago. And so what this is telling me, this is no longer a poor person's problem. This is a rich person's problem, and it's affecting, and rich people are screaming about it now, and I'm hopefully they'll pay attention. But in my opinion, the whole raising rate or lowering rates, Fed funds rate is just, it's insignificant at this point. And what they need to be talking about is Janet Yellen coming out and saying, we're cutting our budgets. We're pulling back. We're going to get our budget in line. That is what's going to change all of this for
And
everybody in America.
I don't see
Oh,
that
hell
happening.
no.
No,
It's
it's
all
not going
about
to happen.
getting voted back in.
It's not to be political, but my degree in economics, I'm going to brush it off a little bit and off
Yeah.
my brain. But when a presidential candidate comes out and says, "I'm going to solve inflation by implementing price fixes on food," I'm like, where in the heck did that communist? I mean, it's right out of the Communist Manifesto. It's let's
Oh, yeah.
control food prices. So what's going to happen? I'm going to go and I'm going to buy. I'm a producer of milk or eggs or whatever.
Yeah.
And okay, and this administration says that you can only charge $2 a dozen for eggs. Okay, so I'm an egg producer and my chickens eat corn. Okay, and then they produce eggs, and my corn price goes up to feed my chickens, and then my labor price goes up because all my help's going to McDonald's for $24 an hour. So I got to match that. So my labor goes up, and then my insurance on my building goes up. Okay, and my property taxes go up. So now instead of being able to provide you, Kroger, with eggs at $1.75 and I make a quarter on a box, I have to do it for $2.50, but I can't because the government says I can only charge, $2 for a carton of eggs. So what am I going to do? I'm not going to just sit there and take the loss. I'm going to go out of business or go find something else to do, or open up a sidewalk, on the highway and sell my eggs there.
Yeah.
And that's called the black market. Okay,
Right.
and we don't have to look very far. Argentina, the old Soviet Union, all these communist countries that have price fixing ends up hurting the people and the people who need it most. And all you have to do is go back in history. I'm not making this up, not trying to be political, but it is true. And that's what's going to happen. I think for a major political party to come out and that's their economic policy to fight inflation, it's stupid. And what you just said about cutting cost and cutting spending in the government, that's where it needs to start. Okay.
Yeah.
Period.
Exactly. And unfortunately, the people who are voting these people in are getting a paycheck in some way or another. I mean,
Most likely.
if you had to come back and say, we're cutting Social Security benefits, we're cutting, Medicare, Medicaid, we're cutting welfare, those people aren't going to get voted back in. And that's what this game is all about. It's about who has the power and who can get the votes. And
Well,
until
I don't think they have to cut those. They can cut all the stuff that we, putting
the
praying
bridges to
mantises on,
nowhere.
praying mantises on treadmills to see how long they last, or whatever,
Yeah.
those things don't need to be happening right now. Or I don't want to be political, funding wars all over the world, when we're in a
Yeah.
deficit. Okay.
Yeah.
Who knows where that
There's
money goes?
It's like, we're not buying, a bag of bolts, no offense to one of our members, for
Who
for
produces bolts?
that I can go down to Ace Hardware and pick up for, $10, charging 100 bucks, paying $100 for it. How much is a toilet seat? $500? Really? I mean, how pristine is your butt? Really? I mean, come on. But I think
You do live in an affluent area.
yeah, whatever.
Yeah.
But I think though it's people I people who people who live are starting to notice. People who live in this country are starting to notice this. And yet that's not what's being portrayed in the news. That's not what's being portrayed on these reports. And I think it's all suspect. And I think people just have to wise up and vote with, the fact that if this existing administration gets back in, you're gonna see pain. I mean, not to be political, but you're gonna see pain.
Well, it's going to be more of the same because it's not going to change. If you like what's happening in the last 4 years and you're doing better, okay,
Mhm.
then yeah, I can see, yeah, I would vote for this administration. But if you're not, you got to have something different because you have 4 more years of this. Uh, it's going to be difficult for you, your family, your kids, I believe.
Yeah.
Okay.
I mean, you think about it, you just apply the deficit we have, or the $35 trillion that we're in the hole for. You apply that, just that, you got $10,000 credit card balance and you only make this much money. How long is it going to take to pay that down? Well,
Well, especially
it's
when your interest
years.
rates are going up too.
Oh yeah, seeing 33% interest rates on some of these credit cards. There is no way in hell, if you're on a fixed income, are you getting out. You're just going to have to fucking bail on paying them. You just are. You just are. And that's unfortunately the kind of thing, that's how we're running our government right now, is we just keep borrowing and borrowing and borrowing, and the interest that we're paying on that debt is skyrocketing. It's
Yeah.
more than I think correct
Defense
me if I'm
and
wrong, the def
yes,
or the military spending is.
yeah, and our I think our Medicare too. That too.
It's amazing, but
Well,
uh,
your purchasing power when they go out, they're devaluing the dollar every time that they go out and borrow more money that
yeah,
they cannot pay off, and it's devaluing your purchasing power. Not and in addition, with the inflation going up, your purchasing power and inflation is why you're seeing pain now. Okay,
yeah,
so there's the two things that if they would stop spending so much money, and actually no one talks about cuts. Have you heard anyone talk about cuts?
no,
This whole monetary theory where, hey, we can print money, that works well. Well, ask the Weimar Republic how well it worked. Ask the Roman Empire how well it worked. We've got all kinds of empires that have fallen because of the money situation.
yeah, yeah. And I guess here's the other side of this. I mean, it's pretty obvious the way we're probably going to vote. Will it be better under that administration? I don't know. I mean, the thing that's working for, if Trump were to be elected, is that he's not running another 4 years after this. This is the one-time shot. And I wonder if we will see change. And I think he seems like a bull in a
Well,
china shop anyways. I would sort of
we've all
expect it.
we've
I don't
already
know.
had we've had 4 years of that administration, and we can look at those results. And now we've had almost 4 years of this administration, and you
Yeah.
look at those results. And what was better? Unemployment rates were down under the previous administration, not so much now. Prices were down. I mean, I think around here, when the previous administration left, we were at $1.6970 a gallon of gas. We're at 3.25 now. Okay,
Yeah.
is
Is it
that
that
better?
low?
How much was food? Okay,
Yeah.
you know, could you? My friend, he goes to this grocery store, and they have these two baskets sitting next to the store, and they're like, "This is how much all this food is at our store," and then they do the competitor, and this is how much it's at that store. And he's like, you know, I'm seeing less and less stuff in those things, but the price is going higher and higher on
Right.
both sides.
Yeah.
And that's inflation.
Yeah. Well, it's like, Ginger and I were talking about it yesterday. Our second biggest expense is our food bill. And the majority of it is our grocery store. And it's like, it's getting closer to my mortgage payment. And I'm like, we got to quit eating. We got to cut back in some way. Maybe we do. Maybe we just go to our HOA and ask if we could have a chicken farm in our backyard, or can I have a cow, or can I, contract with somebody to have a cow and get our
Well,
dairy
yeah.
or whatever. that's ridiculous, but
I,
that's the mindset is happening.
yeah, and I think you just again are. Can you do 4 more years of this? Can we do 4 more years of open borders and absorb all these people coming across and non-vetted people? Okay.
Yeah,
I'm not saying they're bad people. I don't, they want better lives. We've seen some crime go up, but we want people that want to be productive in our country, and assimilate to uh, the Constitution that we have and the way of living that we have. And we have a great country, and that's why everyone wants to come here. If we were such a bad country, no one would want to come here. But that's
that's
not
true.
true. Okay.
Yeah.
But
So,
it affects everyone. It affects everyone. So,
and
um,
it eventually all of this will converge with the stock market.
oh
You
yeah,
know, where this past week we had a recovery from the previous week. All is good again. Markets are
yep,
going to go higher. Yet the economic reports, the real economic data is getting worse. But at some point, and all historically always happens, it always comes together. It
oh yeah,
converges on each other. It's a
yeah.
question of when. It's a question of when. So,
Well, you know when because uh, the majority of our economy is consumer spending. And we're already seeing consumer spending come down. Now, the retail sales report came out. We talked about that a little bit.
mhm.
Um, and it came out at 1%, way over everyone. And so, the markets go, oh, the consumer is resilient. Well, the retail sales report does not factor in inflation, okay, at all. So if you have inflation going up, everything you buy costs more, so it's going to go up. And then you go back and you look at the revisions that we have each and every month that no one talks about. And you go back 4 or 5 months, you can see all the reports on retail sales were up high, and then they revise them down lower. And that doesn't affect the market because everyone looks at the headline number. Not only in that, but it's in labor too. The labor reports we get are almost comical, and even the Fed chairman in one of his speeches was talking about how much can you really trust the labor reports anymore, and that's the Fed chairman. Okay,
Yeah,
so
yeah,
just use your brain and look at this, and it's almost comical. If it wasn't so serious, it would be comical.
yeah, yeah. And unfortunately, it's the little guy who gets crushed in a lot of this. You know,
Yep. And they're
um,
getting crushed now. And not only the little guy, just like you're saying, the upper middle class and the rich class are seeing it now.
yeah. What did you last week? You reported on Walmart earnings that more middle and upper middle class are now shopping at
Six,
Walmart
yeah, more
compared.
six figure families are now shopping at Walmart, uh, which shows you that they're not shopping at the Macy's and the whatever, wherever they shop.
Right.
And then we went over how many like Dollar General stores are closing, okay, throughout the country, and these are the dollar stores that poor people, lower income people go to survive, and they're closing all over the place. Okay.
Those were the stores, the stocks or companies that did real well during the great financial crisis.
Yeah. Yeah.
But we didn't necessarily have the inflation element that we have today. And that is taking a toll even on that
Well, I
category
mean,
of
and look at
stores.
the great restaurant of the lower middle class, McDonald's, and what they're trying to do. They're
Yeah.
it's hitting them too.
Yeah.
Okay.
It was interesting. This Nickel, the guy, the CEO, ex or CEO of Chipotle, is been hired by Starbucks. And I was reading some stuff about this, and there's a good chance you will see more Starbucks applying robotics and automation to their stores because of the cost structure of Starbucks, and which
Right.
all of a sudden means, I mean, what's your most expensive part of a business? Employees. So, and then brick and mortar. So all of a sudden you start cutting costs by getting rid of the number of employees because Starbucks has been fighting the whole union issue. You can go there and make $15-20 an hour. I mean, holy cow. Um, and it reflects in the coffee price. But if you can cut the cost, you can make that company much more profitable. And that's what they did at Chipotle. That's what he did at Taco Bell. So I think more and more you're going to see less and less people having those service level jobs. McDonald's is doing it. They're trying to do no people in the building, all robotics. And I think, unfortunately, that puts pressure on where do I get a job? What kind
Well,
of job
and
do
where
those people get?
and where do these price pressures come from? Well, in the state of California, they came in, they made mandatory minimum wages higher than companies could afford for the products that they're serving. So, okay, you want to raise my rate to 20 or $30 an hour for the people I have to flip burgers? Okay, then I'm gonna have to raise the price of the Big Mac to $25 with a Coke, a small
Yeah,
Coke. And then people stop coming. Okay, so people stop coming, so you have to lay these people off, and then they don't have any jobs. But McDonald's, like you said, is going to say, I'm going to get an automatic burger cooker, and I'm going to get an automatic, customer system that takes their order, goes
yeah,
back to the automatic cooker, comes up to the automatic bag thing, and gives it to you, and you use your credit card, and out the door you go.
yeah.
Okay, no more employees. Okay, how is that good for your economy, or how is that good for any class of citizen in the United States? It
No,
isn't.
no. And
But
so,
again, mandatory price controls, which is how much you have to pay labor. Okay. Instead of the free market determining that, where people can move around jobs wherever they want. If you don't like your job here, go find another one. Get a little bit of training, go become a welder, go become, whatever you want to be, and go do that.
yeah, yeah. I'm very hopeful, which is probably a very odd word to come out of my mouth, that when it comes to making a decision in November, a logical decisions will be made by people. They will look at their present situation and ask the question, am I better off than I was 4 years ago? Is this country going to be better off 4 years from now? And they'll make that decision based on that when it comes to our next presidential administration. So I don't know. So where do you want to take
Well,
this, Mark?
let's get happy.
Okay.
Let's we can look at some charts. We can look at, we had a really good week. Uh, the markets went down, as you know, that's when the Japanese uh, had their little issue and drove our markets down. And then, for the last week and a half, we've just had nothing but come back to almost to where they were before. And so that presented us with a lot of swing trades, which is what we focus on this half of the Platinum Channel is swing trading. And a lot of our members did very well because the setups were there and we're very patient about these setups. And we can show you, kind of where we are and where the charts are today. And as of this morning, or yeah, it's still morning,
Yeah.
and where we think they might be going. We can take a look at some charts and then let's still look at after that. Let's look at some treasury stuff that you want to talk about, Trent.
Yeah. Okay.
And then we'll be more happy and upbeat.
That sounds
We're because
great.
we're just two regular guys who are happy and upbeat most of the time. So I'll pull up a chart here.
Okay.
Okay, so let's look at the S&P first. And tell me when you see it.
I got it. Yeah.
Okay, so here's where we had the China or the Japanese incident. We had some jobs reports come out. We went all the way down, almost, pretty close to the 200-day moving average. But since then, we've moved back up above the Bollinger Band, above the 9, above the 20, above the 50. We gapped up, and you can see where we are. I call this the green line of death, and you can see we've hit this before. And above the green line of death, we have the upper Bollinger Band, and then we have an area where we find a lot of sell orders right here. You can see that happened back. When was this? This was back in the middle of July when we started to see the downward turn. Just around July 10th to 15th that week, hit the 50, came over. Then we had the bad news. Now we're back. But again, here we are uh, at the uh, at the at the initial resistance level or the green line of death. Let's
Yeah.
see if I have where we are. Okay, so here's just the charts of the S&P. Here's the Dow. Okay, the red line's the S&P and the blue line's the QQQs. So you can see here's where we were on the Qs, here's where we were on the S&P, and here's where we were on the Dow. So we're back to almost getting back to where we were. You can see the stochastic has crossed over on the S&P. Here's stochastic, and the MACD is crossed over at this point. But again, we're at the green line of death at this point. We look at the Dow. We can see the same thing. Here's your green line of death, and it did the same thing, went up to where the cells were, and it can do that. So we have the potential, at least on my charts to go up to 411.79 on the DIA if we can get past, our green line of death.
Mm-hmm.
Let's look at
Okay.
NVIDIA comes out next week, right?
28th. Yeah.
28th. So let me put the right symbol in. Okay, so here's NVIDIA. You see where NVIDIA is at? It's right at
Yeah.
the green line of death again. Let me get rid of this thing so we get our chart back. Okay, here we go. And again, these lines mean something. So here's our green line of death, and here's where the sell orders are. And you can get past that green line of death, but it's hard to get past it all. Here's where we had our downturn, for the Japanese issue. Here we came back up the last week and a half. We're hitting right at the upper Bollinger and right here at the green line of death. And we have some sells up a little bit higher. We're at 136.70 on my chart. I think you're seeing the same thing for the
I
green line
am.
of death, aren't you? At one, oh,
Yeah. So I'm seeing,
127.18.
yeah, there's a big chunk of cells
Yep.
between where we're at today and looks like 134.60.
Yep.
So this is where the big institutions have, this is a liquidity creation is the way I interpret this, where the big banks and hedge funds have sell orders. This is where they'll turn their profits from the lows of around $91 a share, and they'll turn that into cash, and they'll take the opposite direction,
Yep.
from my opinion.
This would have made a nice swing trade if you followed the guidelines that we have in the platinum channel. You would have gotten in at around 109, and we would have gotten out today as it hits this green line of resistance at 127. So that would have been what, almost $18 per share in
Yeah,
a swing trade.
it's pretty phenomenal.
That would have been nice. Yeah.
Yeah.
Let's look at Microsoft. I haven't looked at this yet. Oh, Microsoft came up and look, green line of death. So third day of that, we're trading between the green line of death and the 20. We'll see which way it squirts out, but we got Bollingers that are converging, which kind of gives us the idea we're going to move sideways on Microsoft here for a little bit.
Mm-hmm.
And here we got our support level. So it'll be interesting to see if this pops out or if we're seeing some type of a pennant flag pattern and we move out of that. But these Bollinger Bands are really screaming down at this point. Still have good visibility on the oscillators except for the RSI, which is below 50. What else do we got? Tesla?
Sure.
People love Tesla. Same kind of looking chart here. Now,
Yeah.
in this case, our green line of death is up pretty high up here. So here we have the actual where sell orders are below the green line of death. But again, we're seeing screaming down Bollinger Bands trying to converge, which would indicate maybe some sideways patterns. We did get above the 200, which is good, and we're above
Mm-hmm.
the 9, which is good. So again, this is potential swing trade position here, but you've got some resistance above you. We come down, we look at the MACD. The MACD is positive now. The stochastic is positive, and the RSI is positive. So this one came back nicely. Would have made a pretty nice swing trade also.
Check out
Amazon. Go ahead.
Amazon. No, check out Amazon and then IWM, Russell 2000.
Okay. Amazon. Amazon showing the same type of pattern. We went down below the 200, came back up. The 9 came down, popped over the 9, popped over the 200. Now we're above the 20, and we're kind of cruising along the intermediate support level, which I call the blue line of hope. And then we've got a lot of resistance up here with the sell orders. We've got the 50, and we got the green line of death. So, just be careful on that. What do you want, IWM?
Yeah. That'd be,
Russell, there you go. Above the
yeah.
200, above the 50. It's moving up above the 20. We've got some sell orders around 217.11.
Mm-hmm.
Okay. And then the green line of death, you can see how this works. Okay. And we see the Bollinger coming back around, but we've got some room to the upside here.
Yeah.
Your risk is down, your reward is up. Okay. Here we've got a Bollinger or a MACD that's has not quite crossed over yet. Okay. So I wait for a little confirmation here, but A lot of times when you see the stochastic crossover, the MACD is a day or two behind.
Yeah.
And then we are okay on the RSI. So again, another potential swing trade here, but we have an interesting week coming up and we'll see what happens. I could see it going sideways until we get through Jackson Hole. I don't know what you think about that, Trent.
I think so. I think as we come into the end of the month, um, you're going to see some volatility. We've got big earnings out of NVIDIA on the 28th. That's going to dictate where the semiconductor and technology industry really is headed for the next month or two, or quarters or two. But looking at some of the, like I look at IWM, Russell 2000, that's where economically, typically when you see a recovery in it economically, you see small caps doing well historically. So it's
And when
still
interest rates go down too.
exactly. So
Yeah.
I look at that and I go, most companies in the United States are small cap companies or micro cap companies. And so what it tells me is that that in sector or that category of asset class is still not strength, has a lot of strength. So could be a nice swing trade out of it, as you pointed out, but we'll see.
Yep. This is a super micro,
Mm-hmm.
and it had a nice downfall. It came back, we crossed over the 9, and we were having trouble getting over the intermediate support level, which is resistance until you get above it. If you're on the bottom side, resistance is to the top. If you're on the top side, support is at the bottom, like the 9. And then, of course, we got the 200, which will be formidable. But we do see some confirmation on the MACD and the stochastic. Our RSI is still a little weak, but I don't like trading under the 200. That's, you can get a lot of volatility and bumps to the downside because that's such a main level of resistance. So again, SMCI. But for us, it was a good week. I'm gonna go and look at our paper trade portfolio really quick,
Okay.
and let me get that set up here. Oops. Okay, let's get this up on the screen. So we just paper trade to prove the system that we're using. And this was last week. We had over 23 positions that were on the charts of interest,
Wow.
and we just hypothetically buy 100 shares at the price that when we list it. Okay, and that's not necessarily the best price. Okay, because when you swing trade, you try to get a better price, but just to make it consistent. And you can see that at the end, well, right now, at the beginning of the week, we're up $12,200. There was one loss here. We're down on 2 positions only. This one's still open. And again, for the 8 months that we're almost through, about 104,000 off of 229 trades, paper trades. Okay. But this is just how we kind of track the stocks we put on our list. And we also look at support and resistance, our commentary. So that was a good week last week. And I don't recommend that you buy 29 stocks. It's hard to manage a portfolio that big on a swing trade. But we're just trying to present swing trade setups as they come. And a couple of weeks ago, when the market died, went down, our swing trade setups were very small. We didn't have very many. And so
Yeah.
what we do, we sit out. We get some popcorn, we watch, save our money, and wait for a week like we had last week. Get back in, boom. And now if this turns around again, we'll be triggered out. We'll sit
Yeah.
there and we'll watch our money. Okay. And we'll watch others panic while we sit on the sideline, making 5.3% in the treasury. Okay. And making our money work all the time for us instead of getting behind 20, 30% down, and trying to figure out how I'm going to get back in the green. So that's the way it works. So that's the happy side of the two
Yeah.
regular guys.
Well, and I
Okay.
think I think the other opportunity has been in the bond market,
Mm-hmm.
boring bonds. I'm going to show a chart. I'm going to start off with the 10-year yield and share this with you. Tell me when you see it.
There it is.
Okay. So this is a U.S. 10-year Treasury yield. And just as a reminder to those who are on the call today, when yields go up, bond values go down. And when bond yields go down, bond values go up. And so what we've seen here, this is going back to roughly August of 23, roughly a year ago. And as you can see, yields have peaked out in October, right around 5% on the 10-year, and they declined into January of this first of January. So you made money if you were holding a 10-year bond. They, of course, went back up because more risk came into the market. People were taking more risk buying treasury or buying like magnificent seven stocks like Apple and Microsoft and Nvidia and Tesla. And so they exited risk off assets like US Treasuries, but until, which then in April, roughly April 26th, then we started to see a rotation out of the risk off assets. You can see that in SMCI and a handful of other risk on assets like equities. And yields have gone down, which means if you bought back in April, end of April, the 10-year US Treasury, you have been making money because yields are going down. We had a big blowout on the 5th of August. We got down to as low intraday of 3.66% yield, but we have rebounded up until August 8th, which was last week or the end of the week of the 5th. And since then, we are starting to see yields go down even again. And even today, we're seeing yields have dropped 0.62%, and they're at 3.866%. And what I'm seeing is there's this rotation back again out of risk on assets, or out of risk on assets back into bonds and risk off assets. Let's take a look at one more chart here. And this is high yield spreads. And what this is showing is when high yield spreads are low, that means people are buying high yield debt, which is more risk on. This is below investment grade bonds. They pay a bigger yield, but they have a lot more volatility associated with them as well. And so when you see, in this case, you see back in July 22nd or so, we saw a rotation out of risk off assets or risk on assets like high yield bonds, and a rotation out, which then peaked on July 29th. And now have seen a reversal since then, back into risk on assets or back into high yield. And so what this is telling me is there's still this risk on appetite, and we're seeing that with equity positions since the 6th of August, after the big blow up on the 5th of August. And we're seeing a lot of these stocks rotate in. But when I look at this, what I'm looking for is when will we see another turn back out of high yield debt, which is risk on, and back into assets like the US 10-year Treasury. This is a weekly chart. I'm going to show you a daily chart. And you can sort of see it's basically, in a way, going sideways the last couple of days. If you looked at this and a 10-year yield chart together, what you would be seeing is money is coming into 10-year yields or 10-year Treasury bonds, and the yields are going down. And now we're seeing basically a support level when it comes to high yield spreads. And I would not be surprised if over the next couple of weeks we see this high yield spread widen again, go up, which means risk off, and the 10-year US Treasury yield go back down. And I wouldn't be surprised if we see 10-year Treasury yields get back down to their lows that we saw around 3.6 to 3.75%. So that's one way of making money in this market. and it's using bonds, which are more less riskier than equities, depending on the type of bond you're buying. But this is where we're seeing money flow to risk off assets like the 10-year US Treasury. And we can see more of a short-term perspective by looking at high yield spreads. And so to me, I'm looking at this and this is all saying to me, caution. Just be aware that somebody screws up, like NVIDIA reports earnings that are not so great, or guidance is not so great, that you're going to see more assets roll out of the equity market and back into high investment grade bonds. So there is ways to make money in both any kind of market. And this is one of those rotation trades you could see.
I'm going to pull up the 30-year on the long end of the bond on the
Okay.
TLT.
All right.
You can see what's happened on the TLT. When the markets were going down, the TLT went up. And
Yeah.
now you see we come back up. We've hit our green line of death on the TLTs also. So
Yeah.
again, when money goes into the TLTs and you see the yield of long end treasuries go down, you're going to see the price of the TLT come up. We can see that over time. Even back into this was the pandemic. You can see what happened. The market went down. Everything rushed into the long end.
Yeah.
And why did it rush there? It's safety. Okay, we go back to here's the great financial crisis. Okay,
Same
so
thing.
every time there's a shock to the system and the markets go down, you'll see money rush to safety, like Trent's talking about. And then when it comes off and it goes back to risk and everyone goes into the market, you'll see it go back down.
Yeah. And if you look at this chart and you go to the left side of the chart, you can see this base that has been formed over the years. And then you go to a present day and you see this base that is similar to what it was, what was that, back in early 2000s. So to me, I look at this and I go, this is a setup. It's come back to support. Treasury, in this case, TLT, has come back to support. And there is a higher probability that you could see a movement higher in TLT in the coming months, if not years, which would be lower yields on the 30-year Treasury.
And this is the monthly chart. This is a monthly chart. So
yeah.
Yeah.
So to me, this is sort of like, in a way, if a setup for a possible move in the future, in the next 12 months, is what I'm seeing on a upward movement.
So just keep that on your watch list. That if we start seeing things head south a little bit, that this is where you're going to see some money probably pour into.
And it's interesting when I look at bonds, they are sort of the fortune teller of markets. You can go back historically and look at how the bond market interpreted things way before things actually happened. You saw that prior to the pandemic, you saw the bond market yields fall almost 9 months in advance. They started falling, and that meant somebody in the know recognized something was coming in the next probably 12 months. And you saw rotation out of risk and starting to trickle into risk off assets like treasuries. And I think that's, in my opinion, we're starting to see that trickling starting to happen. But it's as you always say, it's the unknown market events, market conditions that pop up, like the whole Kerry trade with the yen back on the night of the 4th of August, and which translated into markets tanking on the 5th of August. Who would have thought? What regular people would have thought that? What regular guys would have thought that? Most people don't. Those are the kind of events. But the bond market is telling me, maybe you should be a little cautious. But there is still opportunity, as we're seeing in the equity markets, as you've pointed out in some of the charts.
Yeah, we just want to make sure that you have the knowledge to manage your money, because it's your money and you work hard for it, and you need to understand what the markets are and how they operate, so you can, if you want a financial advisor, that you can talk intelligently with a financial advisor, and ask the right questions. Because again, if the markets were to go down and we have, another great financial crisis, and I hope we don't, you know, how long will it take to get your money back to even if we do, and you don't have a plan for it. So just be cautious, and that's all we're asking for. We're not trying to be doomsdayers or anything, but I've lived through since 1987 several of these bump downs, and I don't want to see what happens to most people happen to you guys.
Yeah,
And that's why we started the
exactly.
Platinum Channel.
Exactly. And I think, you and I have this sort of saying we've adopted in the last couple of months. Would you like to be right or would you like to make money? And
Right.
at the end of the day, I'd like to make money. And that is looking at all markets and all opportunities. And I look at this and I go, there's always an opportunity. It's just opening your mind up to it. And that's what we teach here. So,
Yep.
yeah. Well, you got anything else, Mark?
No, I think I'm ranted out today, but maybe
Yeah.
tomorrow I'll have some more.
Yeah.
I'll,
There
re-
you
I'll
go.
recharge. I'll recharge over the afternoon and evening.
All right. Well, from Trent and Mark of
Yeah.
Best of US Investors, two regular guys show. Be safe, be cautious, and be curious.
Then hit
That
the
will make you money.
and subscribe.
Absolutely. Check us
Yeah.
out at www.bus13.ai. We have a 14-day trial going right now, and it'll give you an insight to what we do and how we teach people how to navigate markets and become better investors and create wealth, and most importantly, preserve wealth. So check us out, www.bestofusinvestors. We'll talk to you soon. In the meantime, live loud. Peace.
And cut.